So the Fed met today, and the decision was we're keeping rates the same. Now, as a mortgage professional, what is my take on that? How do I feel about that? Meh. Either way, it doesn't bother me. We know that the Fed decisions, rates good or bad, aren't even connected directly to mortgage rates. So whether they lower rates, raise rates, it doesn't even directly affect mortgage rates. But what they talk about and the things that are said in that meeting are things that can help push mortgage rates one way or the other. And that's for sure. My name is Jared Halbert. I'm a mortgage broker here in Queen Creek, Arizona. I service all of Arizona. If you have any needs for mortgages, I'm here for you. Going to help you out. That's what I do. Now, I want to jump into this Fed decision today. So those of you who don't know, every 6 weeks or so, the Fed meets, okay? And they discuss the economy. They discuss the war. They discuss what's going on, and they make a decision as to, are we going to, raise this interest rate or lower? And the interest rate that they set is the rate at which banks borrow money. So obviously, if the rate at which banks borrow money goes up, then the banks eventually just kind of trickles down and passes it on to you as a consumer. Why does it not affect mortgage rates as much? The reason why is mortgage rates are usually a 30-year fixed, right? Or even a 15. That's a long term. Short term, things that it does affect quickly, that's going to be like car interest rates, which are shorter term, home equity lines of credits, which are shorter term, especially when they're adjustable and they adjust every month. So those are things, credit cards, those are short term loans, and those are affected more quickly than mortgage rates. And that's why when the Fed says, hey, we're going to raise rates, we'll still see mortgage rates come down. Or if the Fed says, hey, we're gonna lower rates, and mortgage rates might go up, because again, they're not directly affected or directly tied to what the Fed's decision is. So keep that in mind as we go through this. The things that they mention and they're keeping an eye on, right? We've got that Iran crisis, what's going on down there with the Strait, with oil, with the inflation. They look at that. And then another thing that they look at is AI. That was brought up, and that's a tiny little piece of it, but it's a piece of it. With regards to AI, we have, again, our Fed chairman, Warsh. He's very much optimistic for technology. He's young. He loves the technology. He sees it in the future becoming something of benefit to the economy, making things cheaper. But at the same time, you do have to look at, okay, what's the downside, right? There's when we're kids in school, we got this paper. We would do 2 big circles, and one would say pros and one would say cons, and we had to go through and write all the pros for something and all the cons for something. And then there's the middle ground too. And that's what you got to look at. There's pros and cons for everything. The pros are, okay, this AI, one, it's awesome. It makes things faster, easier. In the future, it's going to make things cheaper, supposedly. But right now, it is expensive. New technology is expensive. It demands a lot of energy, demands a lot of electricity, demands a lot of storage. And so there's a lot that's going on with, hey, as AI continues to grow and implement and change really fast, that demand is going to be stronger and stronger. Can we keep up that way? That's how AI is really also helping decide, is the Fed going to raise rates, lower rates? AI's got a little part in that. I mean, yeah, we look at oil, we look at inflation, but remember, AI, it's new, and it's got a little bit of a play in what's going to happen with rates as well. So there's different bottlenecks in the economy which help this group that meets make a decision. Are we going to raise rates or are we going to lower rates? Because their whole thing is, hey, we have to keep a healthy economy. We have to bring in money, but we can't overcharge, because if money's too cheap, then we get inflation, right? Everybody's buying more and more. Prices are going up because money is cheap. And so there's got to be that middle ground. So again, as a mortgage professional, I try not to let this bother me as much what the Fed talks about, but it is something I pay attention to because again, there's economic factors that go into it, and that can help change rates eventually on the mortgage side. So it's definitely something to watch and pay attention to. So again, going back to what's going to happen with the rates, my thoughts are because we've kind of been at a peak, I think we're going to have a little pullback over these next few weeks. I can't predict the future, but looking at everything, I'm seeing that we might even get a little bit of a pullback, rates coming down a little bit over the next couple weeks, which will be good. Mortgage rates are tied so closely to the market and the day to day. Until that gets figured out, there's going to be this little pressure that's going to be holding these rates from really coming down, back as low as we want them. But they're still great. Rates are still, anything in the sixes is still awesome. I hope you enjoyed the video. Like, subscribe, follow, all that stuff that we used to say. I'm signing out and we'll talk later. Bye.
Check, we broadcasting. Ain't nobody ask, we splashing. Beats that had boom, now we moving massive. Breaking you down in the bass, spitting acid. I'm back in my zone, the top gun of the Maverick like